Buyers are rushing for the government guaranteed home loans. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Gerard Coburn, which is discussing, well, the rush to the government deposit guaranteed home loans. You know those home loans where you only need a 5% deposit and the government will guarantee and pay for the mortgage insurance? Oh boy, they're flooding for them. Just think about the prospects of that. What can 50 grand get you now, as it couldn't in the past? Do you think it might inflate property a little bit? So CBA says it has reached capacity for the first home loan deposit applications. People looking to access the first home buyer scheme are at risk of missing out. Get that FOMO going. Get that property FOMO going. With a major bank confirming it has reached capacity. I mean, Australia's property obsessed. We know that. We all are. It's our country. Everyone loves their house. Even a dodgy fallen down house, you take pride in it. That it's yours, that you've worked for it, or that you're paying the bank for it. Prospective homeowners looking to access the first buyer scheme are at risk of missing out, with one major provider saying it has already reached capacity. And what we're going to see is we're already seeing other organizations calling for an extension to this. So it's going to be more, it'll become a political thing. You'll see more and more people. This new next election we're going to have here, federal election in Australia, is going to be entertaining. I've got to start doing some videos looking at the Queensland election, everyone. I might do that later today. But still, it's going to be interesting if they'll say, okay, we'll have 100,000 new places for this to help home buyers get into their house. And what does that do? Sadly, it doesn't allow the market to correct. It's more stimulus for it. Keeps it elevated. There's no political will to allow it to happen. The thing is, we've got all this debt now that the government is piling on. All this huge amount of debt that they're piling on. What are they going to do with it? They're going to inflate it away. So maybe this dive into property is a rational response because it's a flight into real assets. Could that be what's going on? Do people know what's happening? What do you think? So, or maybe they don't. Maybe they're just being nudged along and behaving really well. The Commonwealth Bank has confirmed it is no longer taking applications for the first home loan deposit scheme, which is allowing people to acquire a mortgage with as little as a 5% deposit, saying it has run out of allocated spots. We're proudly supporting the first home loan deposit scheme, a CBA spokesman said. However, due to the popularity and number of places available under the scheme, we are not currently accepting new requests to join our waitlist. So you can't even get on the waitlist anymore. Australians wishing to access the scheme are subject to loan approvals with certain banks, as the National Housing Finance Investment Corporation has only provided deposit guarantees to 27 lenders. That means borrowers have less flexibility in choosing their desired home loan than is usually the case. Traditional people looking to acquire a home need to pay a 20% deposit if they are to avoid having to fork out lenders' mortgage insurance. As part of the federal government's 2020 budget, a further 10,000 spots have become available through the first home loan deposit scheme, but are only available to people looking to buy a new or newly built home. So think about it. This is the problem. Combined with all of these interventions to stimulate the economy, you're thinking, oh, fantastic, it'll create jobs here. So the tradie gets his job, but then he has to sell his house because maybe something happened, and he can't, or the property, the market for existing houses has now taken a hit. There's 10,000 less people or less families that are taking these spots that aren't going to be buying existing houses. And you think, oh, 10,000 in an economy, that's not that much. Well, look at our building approvals, guys. See the blue lines houses? We're not even doing 10,000 a month. So what's that, 120,000 a year, roughly, we'll say? So that's a big chunk. Assistant Treasurer Michael Sucker said on Saturday the commitment to new builds was to drive activity in the construction sector and support job growth during the economic recovery from the pandemic. Well, yeah, they're chucking everything they can at it because they know construction is going to get hammered. Consumer confidence is down. Price caps limiting the amount that can be borrowed also been increased for the additional 10,000 spots. Yeah, we looked at that the other day, like $950,000 for Sydney. All of the price caps were above the median. Most of them were 650. 950 grand for a first home. Does that seem normal, everyone? Does that seem normal? Maybe I'm just a Queensland bumpkin, used to stuff being a little bit cheaper. CBA and National Australia Bank are the only major banks approved for the scheme and are offering half of the NHFIC-backed loans. A further 25 smaller regional banks are providing the remainder of the allocated spots, which include Bendigo Bank, the Teachers Mutual Bank, and Bank Australia. NAB said it has supported 2,700 Australians in buying their first home through the scheme, with another 1,800 in the pipeline to gain approval. In many cases, it has given hope and confidence to people who have been working hard for many years to save a deposit and enter the property market, NAB Home Ownership Executive Andy Kerr said. Aside from CBA, it is understood all other lenders are still open to new applicants for the first home deposit scheme. Now that we've looked at this, we've looked at the flood of people into this scheme. The flood of people into this scheme, which is just going to drive more, it's going to get more first home owners buying property that they may not have been able to afford. You know, it'll act as it'll be buoyant for the property prices, for the houses that meet these criteria, or the new builds that meet these criteria. But let's have a look at another article. And this is from the beginning of the month, but I thought it's quite important. This is from Mortgage Business. 8.5% of loans still have deferrals. Remember, we're in a strange time where you've got people who are borrowing significant amounts of money and don't have to pay it back right now. They're on mortgage holidays. We've seen how, some people are starting to get demands from the bank to make payment. And I think we'll really see the impact of this next year when, the next extension disappears. But we can see here there's still a big chunk of people that are still deferring loans. And it's not just house loans, it's also business loans as well. For the second month in a row, the number of borrowers exiting repayment deferrals has outpaced those requesting them, according to APRA data, but around 8.5% of all loans are still impacted. So that is a glimmer of good news. Maybe people have taken this time. I know someone said they took the home loan mortgage in my other video I did about credit card debt, and they used it to attack the credit card debt, which makes a lot of sense. That's a roundabout way of consolidating your debt. And this is the one thing I don't get with, I'm a fan of Dave Ramsey and his show, and they all talk about consolidating debt, how it's bad. And I think it's a bit different to how I think of consolidating debt. I mean, what we did, I used my the huge equity increase we got in our house for doing absolutely nothing, and I used it to consolidate all the credit card debts, to wipe them and decimate them, and then we just attacked the mortgage, put everything on there. It's more efficient and much easier to manage. Now, when they talk about it in the States, I think they're businesses that come and do it for you and do all the dodge. It sounds horrific. It doesn't sound like what I would assume would be taking complete control of your debt and managing it and, using that to get rid of it. So, yeah, it's a different world over there. I didn't even know those type of things existed. So maybe that's what's been happening. Maybe people have also been using this time to build up a reserve so they can jump back in. Or maybe they just weren't quite sure what was happening. And they thought, okay, I'd rather have the cash than it off the mortgage. According to new data from the Australian Prudential Regulation Authority, the volume of loans held by APRA-related authorised deposit-taking institutions that exited their deferral status has continued to outpace new deferrals. As of the 31st of August, 8.5% of total loans outstanding, equating to around $229 billion worth of loans, had temporary repayment deferrals applied to them. The volume of exits continued to outweigh those requesting new repayment deferrals for the second consecutive month. In August, $24 billion loans either exited their deferral period or saw their period expire, compared with $14 billion of new or extended deferrals. Small business loans have a higher incidence of repayment deferrals, with 16.2% of small business loans subject to repayment deferrals totaling $53 billion compared to 9% of housing loans totaling $160 billion. The remaining $16 billion is for other loans such as personal loans. While the figures mark a slowdown in exits, it is expected that the September figures will show an acceleration. In March, many Australian lenders began offering borrowers the option to defer their loan repayments for up to 6 months in response to the economic fallout from the pandemic outbreak. As such, those taking the 6-month COVID-19 assistance packages in March would conclude their initial support package in September. However, the banks announced in July of this year that they would extend mortgage repayment deferrals by another 4 months, ending the 31st of March 2021. This is being done on a case-by-case basis with the preference that customers repaying their loans where appropriate. Last week, APRA issued a letter to the banks to outline acceptable practices for the management of loans transitioning from repayment holidays. After reviewing plans from the management for the management of deferrals submitted by ADIs in response to a request from APRA in July, the regulator acknowledged that successful implementation remains a critical risk factor for both lenders and borrowers. And we had a look at some of these letters that APRA was sending out in other episodes. Just where, well, they're trying to ease people back into it. No one wants a property correction. No one at all. There doesn't seem to be any demand for it, guys, here in Australia. Any demand for it. The banks don't want it because it's all their property. All their assets. APRA doesn't want it. The politicians don't want it. Australians don't want it because all their wealth is tied into it. People are hoping that property might correct to a more reasonable level. But I can't see that happening. We'll have a look at Labor's response to the budget. I mean, one thing they're doing, they're pushing childcare super cheap. They're subsidising it to the moon because they want to get more people working. They want more women working, which is fantastic and great. But perhaps you might see wages increase if they had to actually stay home and take care of their families. It's kind of sad if you think about it. Well, at least from my perspective. They get you to work, then they tax you to the hilt, and then they pay other people to take care of your kids so you can work. You gotta hope you're doing a good job, like a job that you enjoy and that you love, that is at least equal, if not better, than the joy you can get from actually raising your own children. Yeah. I mean, my whole perspective on that kind of shifted once I had kids. And it looks a lot sadder to me now, seeing these people just stuck on the rat race. But that's progress, guys. Anyway, back to this. As a result, APRA stated that it expects ADIs to exercise appropriate governance and monitoring over all aspects of the plan's implementation to ensure that lenders can identify and respond to any material issues as they may arise. This latest guidance offered by APRA follows its decision to expand capital concessions for loans impacted by the COVID-19 crisis. APRA recently removed a requirement under paragraph 8 of APS 2020, which prohibits lenders from restructuring a loan subject to COVID relief more than once. You know what they're going to do? It'll be interest only. They'll give people extensions, then they'll push people to interest only, or before they'll have forced sales. They'll do whatever they can to slow down forced sales. That's what they'll do. We'll start to see it. Just wait. So, as a result, temporary capital concessions granted by APRA in the wake of the pandemic will apply to COVID-impacted loans that have been restructured on more than one occasion. The revision was made following consultation with the banking sector, which called on the regulator to provide additional flexibility. I mean, what's the point in having a regulator of the banking sector when they can change all the rules? So, there we have it, guys. Two sides of the same coin. People rushing for this first home loan deposit scheme to get into their houses. You can't blame people. Everyone wants a house. Everyone wants a home. And you still have a fair chunk of people deferring their mortgages. Would you want to be a first home buyer, succumbing to FOMO, getting a $950,000 loan for a house in Sydney? And this time? What do you think, everyone? Have a look at another video I did today about the just decimation to business confidence as well here in Australia, or worker confidence. As always, guys, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day. I will see you all in the next episode.